Put your seatbelt on, folks, because this is going to be a very, very exciting time in the market. I'm David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Thursday, July 17th, 2014, and today could very well have been the day of the market turn that I've been discussing for months. I said it was going to be in the latter part of July, and I started to point out all the indicators that were saying, the market is not what everybody thinks it is. And here we are today with the first indication that we have a turn. And basically, in my book, one more down day will solidify the turn. And look out below, folks, because over the next 3 to 4 months, you're going to see a bear market, and you're going to see a lot of volatility, and you're going to see a lot of whipsaw market. You're going to see a lot of ups and downs. You're going to see a lot of widespread Dow Jones days where we have 500, 600, 700 point swings within the day. That's coming again. We've seen it in the past. You need to prepare for it, and stay with me because I'll guide you through it. And my members who get my trade alerts, are in the right spot, and they're preparing correctly, and we're waiting for confirmation that this is taking place, and then we're going to we're going to pick on the weak players. So I may not necessarily recommend shorting the S&P, but there are plenty of stocks out there that'll give you a wide marginal leverage by just picking on those weak stocks that are going to go down 25, 35, 50%. Those are the ones where you make big money. So that's what we're doing. Basically, there's not a lot to discuss with the market. It was just a down day. Now, what you want to discuss is, everybody says that the market was down because of the Malaysian Airlines airliner getting shot down, and that's a terrible tragedy, folks. And my heart goes out to the families of those passengers and the crew members on board that flight. That was a terrible, terrible thing, and more news will come out about that, but it's just horrible. And what happens is these market turns, you have to realize, coincide with events like that. I can't really explain why that happens. It's a phenomenon that just happens. And I've discussed the cycles before in these videos, and on the blog I've discussed the cycles, and basically also in the free report that you can get by going to the blog and just clicking on the free report, and I discussed the cycle in there. And basically it always seems like there's a news event like this to take the market down, but all in all, it's the cycle that creates the event, and then everything else is kind of a cascading effect from there. Be aware that there's also war cycles, and you're seeing, some of those develop right now with Israel in Gaza and the Palestinians and Hamas and all that stuff going on. That's more terrible, terrible news. And the war cycles, I alluded to this before. I said it before in one of these videos that the war cycles, the 100-year war cycle, if you will, back from World War I in 1914 is this year. So these are the things we need to be aware of. Now, I don't know exactly how a war would or would not impact the stock market, but these are things that you need to be aware of, that the whole sentiment is going to change. Everything is going to change in how we look at events. For months and months and months, or even years, we've been looking at events and we've been brushing off the bad news. And only in periods of time where we have bearish markets does the news really matter, the bearish news matter, or the bad news become bearish news. And the same thing's going to occur now. You're going to start to see news that is really not a lot different than we've been seeing before, only it's going to appear as if it's really, really bad news and it's impacting the markets because that's what they're telling you. But the reality is it's the cycles pulling the markets in the direction that the cycle wants to pull the market. It's that simple. All the other stuff is noise. We just look at the charts and we let the market tell us what to do day in and day out. Sometimes we get it right, sometimes we get it wrong, but we certainly get it more right than we do wrong a lot of the times. Okay, we're getting it right now as far as I'm concerned. One more day and I'm going to say that we've got it right, and this cycle turn was right on schedule if that happens. So this is not going to be a 3 to 4 or 5% correction, folks. Get that out of your mind. Don't listen to the money managers paraded on TV telling you that it's a buying opportunity and stocks are cheap and all that nonsense. Okay, stocks will be cheap when they get cheap, not now. Okay, I'll let you know later when they're cheap, and we're going to buy when nobody wants to buy. When everybody's calling for Dow 8,000 and 10,000, we're going to step in and we're going to buy. But it's not now, obviously not now. But it will. There will come the time, and we're going to work hard to get that time just as right as we think we're getting this time here. So, that's enough. It's a little bit of an off the beaten track way that I'm talking about the markets in these videos, but I think that was important for today because it's very, very important what's going on. It's very important, by the way, that if you're listening, if you're watching these videos and you're understanding what I'm saying and you see what's unfolding, and you believe in the methodology that I trade by and invest by and analyze by, then go tell people you care about. You don't have to tell them anything except just beware. This is a possibility. Go make sure your personal financial situation is all sewn up for the next few months, and don't take a lot of risk and yada, yada, yada. Point them in my direction. That'd be great. I'd love to get more people watching these videos. I would love to get the word out. I'm trying to help, I have a service, obviously, where I provide trade alerts to my members, and those are pinpoint, I try to pinpoint accuracy trade alerts. And you know what? Just let people watch the videos. At least they'll understand what's coming in the markets and make their own decisions about their own investments. That's fine. I have no problem with that. It's just a matter of saving somebody from losing a lot of money, because there's going to be this is not going to be a 5% pullback, folks. Not in my mind anyway. So we'll see how it goes, and we'll play it by ear. Let's go over and take a look at the gold market, because the gold market reversed today. And you can see what's happening. You can see that the gold is going up when the market goes down, and that's connected right now, and it may not stay connected. We'll see how that plays out, but I'm still not ready for the buy in gold yet, and we'll see what happens. It's up and down, back and forth, but you know what? A few more days, another week or so of this stuff. And I think that, I want it to go longer sideways, because the longer it goes sideways, the higher it's going to go up later. So that's kind of what I'm looking for with gold. Let's go over to oil. As I suspected, oil had the reversal, and that's no surprise based on what I've been telling you since Friday. And here we go. We were just a couple of days early. That happens. But all in all, realize that we got the call right. Okay, I said that oil still had another leg higher, and I still think it does. Now, if you're in the oil trade, I would start to look, if you got in it down here, I would start to look for some profits probably tomorrow on an up open, and because you're going to have some support in here, some resistance in here. And right now, I still think the geopolitical events will send oil back up to 109, 110 on the crude contract, and I think you could certainly see $39.5 to $40 in USO, but that's certainly not a guarantee, but it's just what I think. Anyway, I think. Oh, you know what? I know. So yesterday, in the blog post, I talked extensively about the VIX, and go take a look at it on the blog, mystrategicforecast.com. It's the post entitled, "Is Google Going to 1,000?" But in there, I marry Google and Apple and and it was some others. I forgot already what stock it was. It was Google, Apple, and it was Cisco from the last .com bubble, and they were all always going to be trillion-dollar companies, and then they never get there. And then I marry that discussion to the VIX, and how the VIX is basically at a really at it's an all-time low to the number, but it's pretty darn close. So if you take a look at the VIX, I mean, the chart doesn't look much different all the way back years and years and years from this, so I'm not going to squeeze it down. But look where we are. We're at the lows. I mean, what do you think's going to happen down here? This was yesterday I talked about this, okay? And all of a sudden today, look at the daily chart of the VIX again. Okay, I talked about this yesterday. I mean, I didn't know the VIX was going to jump up like this today, but I knew the market's going to turn soon, so I talk about the VIX, and guess what? I mean, this was a ridiculous move today. The percentage on the VIX was what was the percentage? It was enormous. I can't get the percentage on my screen. I'm sorry, guys. Hold on a second here. It's not coming up. Anyway, so at any rate, it was $3.54. Yeah, $3.54. So that's over 30%. I think it was like 32%. So that's a ridiculous move for the VIX. But guess what? Here's the indicator. That's a tell. Okay, there's going to be more of that coming. Now, don't be surprised if we have kind of a quiet day tomorrow and kind of a float around day, and the VIX kind of pulls back on not a lot of volatility, not a lot of fright in the market, not a lot of put buying tomorrow. If the VIX settles back a little bit, I wouldn't be surprised if it settles back a couple of bucks. But anyway, you look at it, the VIX is going to go much, much higher. This is an indicator of what's more to come. Let's just look at a weekly chart of the VIX, and I'll show you what I'm talking about. In a minute, you're going to get back up to $20 in the VIX when the market starts to really, when people realize the market is selling off, the VIX is going to go to 20 in a heartbeat. And then, now I'll squeeze the chart, because then what happens is you start to go into these tops here. This is around 21, then you go 23, then you have 27, and then you start getting up to 30s and 40s. And we're going to get back up there. I mean, no doubt about it. This was 2011. Remember the sell-off we had 2011? And go back and remember that one. This is coming again. It's going to be like that, potentially even worse. And there's going to be a lot of scare in the market. So the VIX is going to get up there. It's going to get up in the 40s, in my opinion. So we'll see what happens. Anyway, that's a wrap for tonight. MyStrategicForecast.com. I'm David Frost. Common Sense Market Analysis.